I'm not talking about ETH or Bitcoin or something else. I'm talking about RWAs to crypto.
Crypto is meant to incentivize the blockchain code and it will go that way. It's not the tokens that are leading the DeFi space, but the RWAs, the tokens that belong to the real world assets, not speculative tokens or memes. What happens currently in blockchain Web3 is people build solutions and then they search for a challenge. What is it that they are solving, right?
Web3 is the blockchain component that I was trying to fill in there. That's how we get it all done. That's the future that tokenization brings to the world.
What's the most tokenized asset right now? Most people believe it's real estate. Is it true? Hey Herwig, welcome to What Are You Tokenizing? It's a pleasure to have you in this podcast today.
Thanks for having me, Harman. It's a pleasure.
So, usually whenever I start a podcast with, people who are building in the tokenization space and to educate people about, what kind of assets they're tokenizing, it's always very well scripted, I'll say, right? We know there's a direction to go, but with your experience and what you're building, you kind of give me a freedom to ask some controversial questions. So I am very hopeful to get that aura of yours. I saw the name on LinkedIn, Herwig Happy. So I definitely would love that aura here to all our audiences. So one thing that obviously I would love for you to start with a brief introduction about yourself and the platform that you are building, and then maybe direct towards a question that I have. What is the most overhyped tokenized asset out there right now, which is killing all other major use cases?
Well, that's a loaded question. So it's again great to meet everybody. Thanks for taking the time to watch this podcast. My name is Herwig. You can also call me Happy. My mantra is Happy Tokenizing. I want to encourage everybody to have a good time and enjoy this. Not be scared of this technology that's going to revolutionize finance as we know it. And I'm a fintech entrepreneur. We can talk a little bit about InvestReady, the company I started before this, I guess a little bit later, but I've always been a believer in sort of the transformation of finance and technology, and I think tokenization is the killer solution, the panacea, if you will. And The loaded question around what is sort of the most overhyped asset? Well, I do again. I'm very biased. I'm a big believer in most assets are a good use case for going on chain. But right now, one that's very hot is private credit. We're seeing a lot of private credit activity. There's obviously a sensational demand for yield. So that makes private credit very attractive, but it's very institutional. It's very fund based typically. I think we're going to see it slow to kind of grow until we unlock DeFi and vaults and really retail access to private credit, because mostly we're going to see it kind of be done and what we've seen in a lot of the past, which is just kind of slowly onboarding investors into the same asset class just on chain. But I give props to folks like Apollo, one of the biggest private credit firms. They are on Securitize, right, working on Converge now, which they're DeFi institutional platform. So I'm excited to see what maybe comes out of that. But again, I know that this industry on the institutional side moves slow. So it'd be cool to see a lot of hype around this come through this year. But I think it'll remain just that, Armand. I think it'll just be hype. A lot of attention towards private credit coming on chain, but dive deeper into the activity and see what's actually happening around it.
That's an interesting take. And as you rightly said, I think it would be an understatement to say that the institutional side moves very slow. It's too slow in that regards. I remember back in 2018, 2019 when people actually started considering institutional use cases, but still they are considering it, unfortunately. Very big names that we can throw around, but Apollo is a great case study these days, right? Everyone has their eyes set on Apollo. So definitely, whenever such big name comes, it becomes so hyped. A great insight, indeed. So, just to let the viewers know why you are a credible source of this insight, I would love for you to share your past experiences and what you're building at STM, because I recently checked it's close to 70 billion market cap that you're tracking. I don't want to give away the surprise, please.
No, almost 70 billion. That's right. STM.co, fastest, easiest way you can go track the market, right? We are tracking as many tokenized assets as we can around the world to put it all in one place for you to easily understand what is the asset, what blockchain is it on, where can you buy it, what activity is happening around it. And we believe we're the largest source out there. We don't discriminate about permission versus public. We try to see what assets are moving on chain, and we try to make that visible for the world to be able to see, from bonds and different kind of issuance from institutions all the way to a lot of the tokenized stocks and a lot of the tokenized products that are available to retail investors or the average individual, right? We're trying to cover everything in one place, which is what many believe to be hundreds and hundreds of trillions of assets across real estate, equities, commodities, bonds, and so forth, right? So that's what STM.co is all about. We have a lot of news and research that we build around this data and insight that we collect to be able to share with everybody. So we actually have our own podcast every Friday. It's episode 284 coming out as the time of this recording. And we actually have a lot of newsletters and different kind of reports that you can digest on top of a conference that we do annually called Tokenize This, to bring the industry together, especially a lot of the convergence of TradFi, traditional finance, with, of course, crypto and tokenization and RWAs with what's happening. But before that, I actually had a compliance hat on. I'm not a lawyer, but I did start a RegTech company. We did investor accreditation software, still do, as well as a lot of other RegTech solutions to onboard investors for investment programs and platforms, including recently the launch of a token-based identification solution that's soul bound for investments and investor passporting, as we call it, right? So Invest Ready is what that's called, still very active. And today gave me my bedrock, my foundation in compliance at the end of the day. But I got early into blockchain around 2015 or so, and around 2017 that intersected all with my background with compliance and blockchain, with a company asking me to help them tokenize.
Amazing, amazing, and this sends such a strong message. I'll tell you a brief. Like most of the viewership that we have, it's from universities in North India, where we have established center of excellences in blockchain. We are teaching students every now and then. We do sessions with them, and when I say we, I mean different people in blockchain, not a single company. A lot of people have been trying to educate blockchain related courses here, and one of the common misbelief that all these students or even matured startup founders have is that uh, if you succeed in industry like tokenization, it's too young of an industry, it's by chance or by connections or by hype. But it's people like you who can change their mindset and give them the actual view that it's actually the experiences that you gathered. And as you rightly said, compliance is one of the biggest hurdles that many tokenization companies face. I've seen a lot of them suffering, like just identifying how to engage with regulatory bodies, that's difficult for them. And that experience that you have definitely adds a lot of value to how the company has been moving forward, I'm sure. But again, great to know that insight. So I did go through, the different podcasts, newsletters, and the conference that you have. I think it's called Tokenize This, right? If I got it right.
Correct.
Amazing. So there was one interesting aspect I saw there. There was I call it Web4 mantra, but it's something that you have written is Wall Street without walls. So what's that? Please, I would love to know.
Well, it's kind of a fun way, an alliteration to be able to try to bring attention to the concept of what tokenization is doing, right? Which is the idea that most of the world's capital markets, are kind of constrained to Wall Street, right? That's where the biggest companies are listed in trade. And, not everybody around the world has easy access to the Wall Street, right? Not to mention that, of course, it's built on its own legacy infrastructure, actually, that was kind of like developed around the 70s and has kind of been band aided and fixed and improved slightly along the way. But it really is in need for a new operating system, one that is built on blockchain. And that blockchain opportunity is what can actually open up tokenization to everybody. So I kind of make the joke that it's Wall Street without the walls, right? Because now it means that everybody's going to be able to take advantage of Wall Street, be able to hopefully easily access tokenized assets everywhere, not just in the U.S. but globally. right, on chain, instantly, peer to peer, to be able to do borrowing and lending, to have financial freedom. That's sort of the potential that's being built, right? And there need to be guardrails and protections, and there are rules and regulations to follow, which is what scares a lot of entrepreneurs potentially. But absolutely, by no means should it. This is not meant to be an industry that is taken over by the old guard, the incumbents, and say let's build out the future of finance on chain. No, this is meant to be done by entrepreneurs, by individuals, people with an idea and a belief. That's what excites me about the concept of Wall Street without walls.
Definitely, I think that also puts in perspective the I'll say feeling or the intent that the crypto community has been showing when institutions have been trying to come in, or we have seen governments trying to come in Bitcoin and cryptocurrency. They share the same vision that it is not meant to be taken, by the old system. It's meant to be an upgrade. It doesn't need to transform, but needs to evolve, and that's definitely aligned with what you are saying. So I think the idea that I saw somewhere that in these newsletters, Wall Street without walls with Web3, it was. So that I think that stems out from the same vision.
That's right. Web3 is the blockchain component that I was trying to fill in there. That's how we get it all done. That's the future that tokenization brings to the world.
So, while I understand what you are saying in terms of how Web3 can help Wall Street break down these walls, what would be the practical aspect of it that the audience can understand more easily? For example, uh, when you say walls, it's geographic, regulatory, technological, or all of these, like what exactly?
Correct. It is figuratively all of the above, right? We're talking about the actual barriers where someone in, Sri Lanka or, somewhere around the world that isn't as a developed financial market may not have access to all of the product library on Wall Street, let alone more of in general, right? Not everybody has access to all investments around the world because of qualification standards or otherwise. This is sort of an opportunity and a movement where we can now control who owns what as a better understanding of the asset ownership, and so regulators can perhaps be more comfortable with the idea that not everything needs to be exclusively owned by, say, accredited investors or institutions. Right? That's one barrier of regulatory. There's another one with the geography, as we mentioned. Another one is just the product suite, right? Of okay, it's not so easy to access and manage a portfolio of stocks, gold, diamonds, maybe startups, crypto, right? All in one place. We need that operating system, that evolution that you were talking about, Harman. That's necessary in order for people to be able to do all of that on chain activity, all in one place, right? We need Wall Street to upgrade. So these are just about the barriers that ultimately are all going to be broken down, we think, by this disruption, this technical revolution that really can't be stopped because it really is a fundamental 0 to 1 in operating for finance. It's just faster, cheaper, and enables basically the ability to make assets smart, react programmatically, and eventually with AI, right? And so these are all
Yeah,
very,
I,
very important things that today's infrastructure will never be able to do sufficiently.
I
An
was
AI
about to.
couldn't say that. Go ahead, Harm.
No, no, no. I'm sorry. I just got me excited as well. What you mentioned, I was about to come to agentic AI as well. When you see assets become smarter, it's there's no limit to them being smarter, right? And like people don't even have the idea uh, how much liquidity can be induced. Like everyone keeps on saying RWA is going to make a liquid assets liquid. That's kind of like a very common term they all use. But there's no idea, boundary to the imagination how fast it can go and agentic AI can do.
Absolutely.
Amazing. But while you were mentioning this, there are two aspects that we discussed. Institutions will adopt, but they are slow. At the same time, until Wall Street and similar kind of structures do not integrate blockchain, we cannot see mass adoption. I saw that you are already bringing institutional partners and collaborations, and I'm sure that are very instrumental in bringing these solutions to real life. But what do you feel like is the missing component? Even though institutions come in, even though partners come in, what's the missing feature that you feel like?
Yeah, it's a bit of a two-folded problem. I think one is, we're trying to upgrade the largest, infrastructure for one of the most important things, money and assets in the world, right? So it's not meant to be something you can just kind of upgrade and switch to overnight. Especially the bigger the institution usually is, right? That's why we call them institutions, because by design, they're so big and so instrumental that it's kind of like, okay, they're not going to just be able to kind of reform themselves. But this is a technical revolution that is happening. Um, when it comes to what's missing, I think the other side of just the chicken and the egg marketplace of just kind of growing it and building a new ecosystem, which is what's happening, is regulation, right? It's on one side there is nothing stopping tokenization from happening, but on the other side it could be dramatically eased and bring confidence to specifically institutions, right? So when it comes to specifically the roundtable that's happened again as of recording this week recently in the United States, the SEC held a
Yeah,
roundtable on tokenization. This is huge shift from the
amazing.
previous,
Yeah,
administration, right? Some of the biggest industry leaders coming together, led by one of the commissioners, Hester Peirce. And now the thought thinking process might be okay. A sandbox that we've seen other geographies leverage really well, right? Of creating a regulatory sandbox to encourage innovation to happen under the guise and the oversight, so that you can kind of, instead of avoid these no action letters to send to companies, actually encourage participation and engagement in innovation. I think is a really big deal. And other insights, right? Something we've talked about for a long time on the show, on our podcast, is from the very beginning how many countries, except for the United States, have already done this, but many others are still doing so, is we need to pass a simple law that says we can use blockchain as a reference or a source of truth for ownership, right? Right now in the United States, you have to use digital twins or mirrors, as we call them, mirror cap tables, on chain. Ultimately, we need to be able to use, as an underlying central registry solution. And the United States hasn't done that. Many other countries haven't done that. And many others have, to say, look, it's as simple as saying securities on chain are also treated like securities. You'd be amazed by how something as simple as that is now going to bring confidence to the compliance departments and to the, because of course the business side and the innovation side and all these people are sold. It's more so, okay, how fast can we upgrade and how can we do this the right way and properly? And so the acceleration that we're missing, I think, because it's all headed there, is that kind of regulatory hurdle, aside from, of course, the difficulty of trying to build a new ecosystem, a new marketplace, if you will, regardless of whether it's on chain and what assets are behind it.
and just to focus on one bit that you shared, when you say regulatory clarity, it doesn't necessarily mean crypto or blockchain related. It's also about digital twins related, that people understand assets can move digitally, and when they move digitally, the safest place becomes blockchain. It's kind of like running in parallel. It's like what Europe launched, the digital product passcode, right? They want to save paper and everything, so they are creating digital product password, DPPs. That's a big step towards digitalization of assets, and eventually blockchain is the only, I'll say, best way to tokenize or digitalize them. So for us, I think digitalization and tokenization is kind of like a similar kind of word we interchange a lot, but not that easy for people to understand. So that's interesting take, but I'll take a step back from the regulatory side. I'm sure there are many interesting aspects, but it's too of much of a rabbit hole, I'll say. And I'm very emotional about it since I'm based out of India. You might understand why. So I'll take a step back and discuss a different kind of aspect of RWAs. So I also saw somewhere that you are creating a kind of like an open source community, a decentralized RWA community, so to say. And I have been recently in touch with a lot of organizations who are exploring DAOs. There's a big movement in establishing cooperative societies at blockchain, establishing DAOs with organizations, education institutes, sports institutes, a lot of them. What's that about? Please share that.
No, I'm glad you brought it up. That's called Wally is the name of the token, the Wally DAO. So
Ah,
last year we formed together sort of a trade association, the RWA Foundation, as STM.co. We are tracking the whole market, covering everybody. We have great relationships with all the issuers, all the marketplaces, the tokenization engines, the blockchains themselves, right? So we were in a very good position to be able to sort of bring all of these folks together and say how can we further further adoption and increase and support the industry of RWAs as a whole. And one of those initiatives being that instead of your traditional boring like association that is just a bunch of CEOs talking, right, a bunch of representatives of firms, we wanted to bring in the actual consumer, the user, into the mix, right? To give them a voice, and that's the concept behind the Wally DAO, is to say, all right, let's create an RWA foundation, right? But on chain, decentralized, essentially, like what you said, to grow the largest RWA community in the world of both crypto natives, is really anyone that goes on chain with RWAs. And the way it works is we're going to have a lot of different perks and benefits for our members, right? Holding our Wally token. This is Wally, by the way. Holding our
okay.
Wally token will give you benefits to our RWA partners, different perks, discounts, maybe access to certain things, as well as potentially benefits like airdrops of our partners with their own native tokens that they're powering their infrastructure with, that they want to give to our community, to our members, because we're so focused all on RWAs. And I'll end on this, which I think is the coolest part, is it's completely powered or will be powered by RWAs themselves. So we are assigning the DAO's treasury essentially to be swapped into real world yield, as we like to say, right? Whether they be treasuries or real estate or other products that help sustain the operations of the DAO and the foundation, and even buying back the token on the market. So lots of cool potential things that from there the DAO now has resources. The community can choose to do what they want with them and to vote on how they are used to ultimately support, the growth of the ecosystem and ultimately, our mission to support the RWAs. Right?
I'm sure you already know, but I'll just share my thoughts on this. This is actually what's needed in true decentralization aspect. Because when we see foundations of some of the biggest blockchains, eventually the foundations become too centralized that the blockchain is not able to grow at the level that it's supposed to be. And with different assets and different partners coming in with their own stake, I'll say, and governance distributed among them, that's what the whole game started from, right? So I see the point of that.
Glad
Amazing.
you
But
brought it up. We're trying to be, for the industry here. This is by the industry, for the industry. We don't have VC backers. This isn't really meant to be any kind of like a pump and dump play. And by design, uh, RWAs are fragmented by geography, right? Everyone has different rules and access around the world. By asset class, there's all these different assets that can be put on chain. And then also, even just sort of by blockchain, right? The fact that there are tons of different blockchains with RWA ecosystems on them, and interoperability is a sort of a needed trend. So we felt that a foundation is very needed for the industry. But this way, with the DAO, it can be community led and ran.
amazing. But what challenge I see there is, how do you manage all this data on chain and off chain, right? Because obviously multiple assets, they have different dynamics, they have different industry standards. So how do you manage them on chain and off chain?
Yeah, that's a easier question asked than
Yeah.
answered. Let
Yeah.
me just put it to you this way. That's exactly the challenge and opportunity that we love over here at STM.co, right? Our sort of new slogan is markets on chain, because we believe that all financial markets are going to go on chain, as I mentioned earlier, whether they're public stocks, whether they're private companies, whether they're commodities, real estate, bonds, and debt products, and everything else. We want to track it. And that means tracking who the issuer is, what the asset is, any disclosure data related to it, where does it trade. It now can trade on multiple sources, on centralized exchanges, and on DeFi applications. Right, there are pools and vaults and other things that are formed around them. There's, of course, market data, off-chain data that's very relevant, as well as appraisals to assets and portfolio valuation, net asset value calculations, and other things. So we saw the opportunity early on, as STM, saying, okay, there is a need to be able to help investors access RWAs, not because there are products or whatever, but because there isn't enough information visible to the market for investor confidence to make decisions and to be able to research and say, hey, this is something I want to look at. More aptly said, like a Yahoo Finance or a Coin Market Cap, doesn't really exist perfectly for our sector. There's great analytics tools, but as I mentioned earlier, a lot of them focus on specific sectors or really only track public chain activity because it's easier to grab. But at the end of the day, there are what we've identified as over $250 billion in non-stable coin real world assets planned to go on chain through all of
Wow.
these hundreds of different providers that are working on this. So 70 billion is just the beginning that we're tracking, almost 70 billion, right? And it's not easy. It's an incredible team and hard work to be able to
Yeah.
aggregate all these different chains, all these different sources of data. We actually launched in 2018 at stomarket.com. That's our old website you can check out. We still have all of the data there in the old format, but it took over 3 years for us to develop a new architecture to launch our new version, stm.co, which is, again, as of recording right now, still in beta, but you'll see a lot of great features rolling out all the time where we're making it easier for you to be able to track this space, access this space, connect all of the different RWAs in one place so that if you want to buy them, you can find out where to do that thanks to stm.co.
There are so many questions popping in my head that I want to bombard you with all these questions. But the first and foremost, 2018, that's a time where I think the only thing tokenized was agriculture produced in supply chains, and that also not tokenized properly. How did you start in that era? What tokenization use cases you saw there?
That's a great question. So actually, back in 2017, even as early as 2016, I was already exploring kind of the concept because, as I mentioned earlier, my compliance company serves the new concept of finance, fundraising and finance on Web 2 on the internet. And we provided that RegTech software for that. So I already kind of early made the connection of, hey, ICOs are cool, right? We got this token technology and they're backed by these awesome decentralized concepts, but there's no reason we can't also use the blockchain for securities, for assets to be able to track ownership in a business. And so in 2017, during the ICO mania, right, I was being approached a lot and I was very careful about wanting to put my name on a project. And one project that did listen to me wanted to, because I was saying don't do an ICO. So not many people wanted to listen to me at the
Yeah.
time. But I was saying, tokenize your shares, do this the compliant way and be novel, create some history. Because back in 2018, in the beginning of January, I believe, when they did it, they launched. It was the first compliant tokenization, as far as I know, in the United States. There have been a few others that hadn't quite followed the regulatory rules. But ultimately, that's when the light bulb went off of like, okay, this was very cool. We went through the process of tokenization, with this client. We actually do quite a bit of consulting still to this day to help bring people and issuers on chain. But that's what sort of led to the foresight of, okay, well, this company did it. Why won't all of capital markets do it? And quite frankly, I'll be honest, back then I thought it would happen a lot sooner. The reality is going to move very, very slow. But it's happening in a huge, huge, massive way that it's hard to ignore. And so back then, it was the same thing. It was a lot of everything, very bespoke assets, alternatives, a lot of money grab projects that couldn't find money elsewhere. So there was some bad stuff coming to market as well. A lot of startups that, just with big dreams that are looking for capital. So it was just us trying to track whatever. A lot of real estate too has always been a very popular use case. And in the beginning, when we launched in 2018, we had a little over, I think it was 70 or maybe over 100, I actually forget, total primary offerings. I think it was a little over 70. And when I say primary offerings, I mean active offerings that were raising capital for their token. So there was no trading activity to begin with. That actually didn't happen until at the end of that year in December. Later, that we were able to track the very first market, which was called Open Finance, which is now INX, and then later T0 in 2019 and beyond. So that's the story of, from there we just knew we want to track it all.
No, this is a classic case study that people need to follow because of your experience before in the market, and then when you entered in the ICO age, and then you could see the problem and challenges. That's when you built STM. Uh, what happens currently in blockchain and Web3 is people build solutions and then they search for a challenge. What is it
Right.
that they are solving, right? I've seen companies building insurance solutions, digital certificates, supply chain management solutions, and then trying to figure out what's the problem. They don't even know the market size, and that's a big problem that's been happening in Web3 a lot. As you rightly mentioned, most projects are chasing liquidity, funding, and investment in the first stage. But if you build for the long term, that's where you grow. Really insightful to know all this. And I believe those people that might have turned you down in terms of not to do ICO at that time, they would be looking at it right now and thinking, that guy was speaking the truth. ICO came, IEO came, IDO came, STOs, NFTs, whatnot. You can replace all of them. And right now it's TGE. It's all the hype. But you cannot replace a digital twin if you are doing it right. Right?
That's just the reality. Is we talk about the flippening. I'm not talking about ETH or Bitcoin or something else. I'm talking about RWAs to crypto. Right? There's a couple trillion, 3 trillion, for almost four in crypto assets again as of this time. We think that there is going to be 5-10 trillion easily in the next 2 to 3 years. Right? So we expect this to be a massive trend that overtakes all of crypto too. You're already seeing it, right? Many of the crypto exchanges that are now looking at RWAs, many of the blockchains that have full RWA tokenization divisions or focuses, or originally even purposely built for that with that vision in mind. So I think it's going to be hard to ignore, especially as DeFi. I think DeFi was always built for RWAs, right? As we start to figure out how to unlock that and supercharge assets with DeFi, it's going to be, as we like to say, the genie will be out of the bottle, and nothing can be done to stop RWAs from there. So, um,
Uh, Rightly said. It's like everything is fitting into the right piece slowly. Crypto is meant to incentivize the blockchain core, and it will go that way. It's not the tokens that are leading the DeFi space, but the RWAs, the tokens that belong to the real world assets, not speculative tokens or memes. Uh, Different viewpoint altogether on there. I won't touch that again. But you rightly said that's how the pieces are being together and the genie's out of the bottle once that actually happens. Amazing. So, while we are talking about this shift that's been happening over the years and the puzzle pieces coming together, uh, I saw that you have served family offices through the Miami Venture Capital Association, if I'm getting it right, some time ago. I don't remember when. So, how have you seen the perception of these VCs shifting towards RWAs over the past years?
I'm here in Miami in our Miami office, and it's a big location for family offices. So we predominantly deal with a lot of those types of folks. There's some venture capital down here too now, but that was the effort of the MVCA, is to try to organize and start to bring more venture dollars into the ecosystem, and ultimately. I still think we've got a long way to go when it comes to the education front, right? Of whether you're a venture capitalist or a family office or even a a crypto investor, although you're the most likely to understand, what's happening here probably, versus even like a traditional pension fund or hedge fund or, TradFi type vehicle, right? All of them still need a lot of education, whether it's in the form of seeing it live, right? Use cases, seeing if we can see a company like Stripe do a direct listing in the form of a token instead of IPO the traditional way. That's going to make a lot of waves, right? Something like that to happen. Coinbase tokenizing their stock, like these are real use cases that could come about to really cause mainstream education. But on the other hand, that's why we have conferences like Tokenize This, our book Blockchain Explained. Just everything we're doing is on a mission to try and educate as much as possible, because without people understanding what RWAs and tokenization are all about, it's never going to happen, right? Crypto has already educated people to a point that there's a large side to it of people where they have no interest in crypto, right? They actually want nothing to do with it. They're scared of it. They think you could lose it or get hacked if not done properly, which is not wrong, right? But that's not the case with RWAs. We're really just creating a better financial ecosystem, one that it isn't better if you can just suddenly lose all your assets, right? So trust me, there are safeguards and rails in place. Some people look at these permissioned environments as that's not as kind of a bad thing in some cases, but for the rest of the world, for those of us who want peace of mind and security in our assets, we want these protections put in place for RWA. So yeah.
No, I agree with you totally there, and I share that vision. You would, I'll just share something as well if I have it here. No, I don't. So I have this small book I have written. It's called Why Blockchain. Different problem that I'm trying to solve, but the same vision. The question that I used to come across a lot was, why should we invest in a technology which is not even regulated or not even being accepted at a global stage, right? And I used to answer very lengthy explanations, but so I decided to just concise, bring it in one book and publish it. I'll definitely send you a copy.
Please do. Yeah, I'll put it here.
Amazing. So, while I see this transition that you are saying and the education happening slowly and regulators moving forward with this recent news of Apollo and then SEC chairing a roundtable, all of this is a very positive sign. If people are not being positive, then I don't know what will make them positive yet. But since we can see that this is how the space is evolving, where do you see I'll say STM's headline in 3 years? What will STM say? Will it remain the same, or will it is having a different vision?
Oh, I mean, I think the headline will say that there's hopefully roughly 10 trillion already in assets on chain in 3 years.
Okay.
You can track it all at stm.co and do a lot more, right? We intend to make it so that you can visualize and view your portfolio for RWAs in one place. We want to make it even easier to be able to buy and participate in the RWA ecosystem, as a lot of other cool products that we have in the pipeline, other than the news and media that will continue to push and promote to give more and more content, more events and opportunities, as well as cool research and features and tools, let's say, for investors and for the market, to be able to visualize the RWA industry and participate in it.
10 trillion, that's a very hopeful number, I'll say, and very achievable as well. Maybe we'll get to see with more companies coming in and actually tokenizing, not just announcing. That might make a big difference. But amazing. Before I ask my last question, another curiosity I have, and I'll bombard you with another question here. What's the most tokenized asset right now? Most people believe it's realistic. Is it true?
It is to a certain degree real estate, most visibly. I think there's a lot of announcements and pipelines, and this is where you have to kind of dig into the details, right? It's very easy, especially for a lot of large asset managers, to say, "Hey, we're tokenizing a multi-billion-dollar portfolio," right? And so, you
Exactly.
know, on one end, it's gets a lot of headlines, right? It's like very
Yeah.
cool, the mantra doing that deal with Debunked for 1.5 billion or something like that. These are very big needles, but we're also talking about a $300 trillion asset class that the bigger needles that will move are things like title registries going on chain and opening up easier access for tokenization. That's what I think will be cool for real estate. The asset class that, depending on your definition of tokenization, right, that has currently the most use case are repos, repurchase agreements here in the United States, which is basically
Oh,
interbanking cash management. There are, I believe it's now over a trillion a day, but don't quote me on that. I know it's over a trillion a month for both JP Morgan and Broadridge that they are powering on their blockchains, which are either distributed ledger technologies or permission chains. And then the more open public use case is the RWA that's hidden in plain sight, as I like to say, which is stable coins, right? We have over 200 billion, almost 300 billion in stable coins. That's the most popular without a doubt because it's not just a crypto use case. It's got real world adoption, whether businesses are using it, whether intermittence by individual people, right? I think we've bridged the barrier from beyond crypto, and it's absolutely an example of a real world asset that's enormous in size. So after that, it would be yield coins, as we like to say, or tokenized treasuries, aka the things backing these stable coins. That's the most interesting discussion to date to me, which is if you've got a dollar stable coin and that company is just going to take your dollar and put it into a treasury and keep the yield, versus you've got a yield coin that virtually does everything the stable coin can do, but it gives you the money. Why on earth are we transacting in stable coins and not yield coins? I would go with the product that gives me money all day long. I think you would too. So there's regulatory and lobbying and banking interests that need to be protected around all this. But if you ask me, the future is going to be not stable coins but yield coins because everyone should just be in real time cash management business on chain. But anyway, I digress, Harman.
no, no, no. I totally agree with you there. One thing that we keep seeing is conspiracy theories that uh, only the rich and most privileged can make money with money. All of us are beating down with inflation, and that's where the yield coins, what you are talking about, fits in perfectly. When you bypass the system and you are actually making your money work for you 24/7, and then AI agents come in and explode the whole space, and then DeFi comes in on top. Uh, you can't imagine how far the industry can go and what changes it can bring. It's unimaginable, I'll say, but definitely quite exciting, with at the least to say. So uh, I have taken a lot of your time, Herwig. I know you have a lot of schedule to follow. I'll just close this with one last question. And that's more for the audience and me to understand how, someone who has this kind of experience in building STM and, this kind of platform with such big players, how would you uh, do a cold call punchline to a Fortune 500 CFO on joining STM's data network? What would be your, I'll say opener?
to sorry to say to a Fortune 500 company to ask them what about STM?
So, to ask a CFO, let's say, for example, this companies that you mentioned, to let's say if you want to persuade a CFO of a Fortune 500 company to join the STM network to explore coming on chain,
I
what would
see.
be your opener be?
I would say adapt or die. That's what I would. It's
Makes
going to come
sense.
down to that. There's a mantra in finance, especially for Fortune 500 companies, for CFOs. Where the idea is to follow fast. No one wants to be the innovator, but if there's new trends in place and there's efficiencies and better accounting or financial opportunities or cash management solutions, right? They're going to pursue them. So that's the typical mantra, is to fast follow, but we are getting now at the point where this is going to be an entirely new landscape that's going to eat the lunch of the entire old landscape. And if you don't quickly act now, you're not just going to be following fast. You're going to be looking to survive and catch up. So that's what I would say to a Fortune 500 CFO right now.
and throw some words like Nokia and Yahoo in that to make the case, right?
Exactly, exactly. Don't be Blockbuster. Make sure you're using tokenization as a competitive advantage, because that's ultimately what it is over your competitors, right? That's what's going to give you, regardless of everything else. The example that I like to end on here, Harmon, is Apple. What is Apple's most valuable product? It's not their laptop. It's not their iPhone. It's not even their AirPods, which I love. It's their shares, right? It's their stock. That's the most valuable thing to them. And ultimately, if they can align shareholder interests with customer interests and bring more people to buy stock, right, Apple stock, that's going to be a very powerful thing for them. So, to the CFO of Apple, you could be using tokenization right now to create more demand and value for Apple stock. That's what every CFO should be listening to. And hopefully they do, Harmon.
Hopefully they do. Indeed, indeed, Herwig. Thank you so much for giving this time today. It was one of the very insightful podcasts I've done and insights I've captured. Really glad I got to discuss this with you. The only, I'll say, the biggest take that I take from this conversation is that, contrary to common belief, number one, tokenization is not just adaptive in real estate. There are many other things moving beyond the normal I can see. And second is that it's not just blockchain and crypto, it's AI, DeFi, everything coming together to make these assets move, become smarter. I hope the audience also takes a lot of this information home and build some stuff on it. Thank you so much once again, Herwig. Very glad to have you here.
Yeah, they can always track it all at stm.co as it's happening in real time, right? And I encourage anyone who's interested in this topic to come join our community with the Wally DAO. We're live now. We have a fast growing Telegram. And as I always like to end my shows, happy tokenizing, everyone.
Happy tokenizing indeed. Thanks, Herwig.